Good evening. It is time for today's tax talk. I am your host. I'm attorney Stephen Leahy. It is Thursday, June 30th, the year of our Lord 2022. Let me move over a little bit here. And, the IRS has this tax tips email list. I'm on several email lists at their Twitter page because I'm always interested in what's going on in the IRS. There's a link underneath in the description here to take you there if you wanted to subscribe to their email list. They have tips and things. Sometimes I get ideas for this show, as I did today about this. So we're going to talk today. They have one about the gig economy and what you should know. Remember the gig economy. That's all the cheaters are there according to the IRS. But that's what we're going to talk about today. So won't you join us? So the gig economy is kind of a shorthand for independent contractors, 1099 NECs, non-employee compensation, and this is what people get from there. Now, what's going to, that's what this the new Cash App law that came into effect last year, or it's coming into effect this year. It was passed last year in the American Rescue Plan. And this is designed to catch gig economy workers who are not reporting income, and so that's why they're all these cash apps, because you would get paid, you do some work, you sell something, you get it on the cash app, you never report it to anybody, and the IRS looks at that as thievery. You're stealing from the government. I don't look at it that way, but that's the way they look at it. Because remember, the 16th Amendment says that give the federal government the authority to tax income, says that all income from whatever source derived is taxable, and so all income is taxable. They're trying to make it so the analogy would be to traffic violations. If you're going 55 miles an hour, if there's a 55 mile an hour zone and you're going 56, you should get a ticket. No, you shouldn't. What if you're going 57? Should you get a ticket? No. It should be reasonable, right? You try to keep people in. You don't want, but when you start imposing these rules on every dollar everybody makes, all you're doing is feeding, in my view, the black market, because people will always turn to that, because you make it such that it's impossible to avoid. I shouldn't say it's impossible. It's not impossible, but it's very difficult. So there should be some leeway there. Every dollar everybody makes shouldn't be taxable or taxed. It's all taxable. Should it be taxed? Well, that's a different matter. But again, these rules, this reporting from the Cash App and everything, it doesn't change the rules, right? The rules were that's always been taxable. Tax any income from whatever source derived. That's taxable. Now, I was just using this analogy about the tax act. Now, I got to tell you, I always drive 55, right? and I'm saying that I always report all my income. I do that. Most people do. Most people don't have a choice, right? Because most people are W-2 employees, and everything is reported. Every dollar you make from your employer is reported to the IRS. And this is why the IRS wants to go after everybody's bank account, to make sure every dollar you get is taxed and they get their end. Again, I think it's onerous, and I probably said this recently, and I'm going to say it again. If we allowed the police to go into our homes and search everybody's home whenever they felt like it, I assure you crime would go down. At what cost? Right? The cost of our freedom. And it's the same thing for me with your bank. right? If we let the IRS just go into everybody's bank and make sure that everything's right, more income will be reported correctly. At what cost? Our freedom. And so I'm not. I don't support that notion, and I don't think most Americans do, because when it came out that was part of the plan, that's when the Build Back Better plan failed, because people said, "What?" And that's when they started learning about the Cash App rules. I didn't know that was passed. Wait till next year when everybody starts getting the 1099Ks, and that's what most of the gig workers are going to get, 1099Ks, because they get paid through Cash Apps. So let's go to the story. This is the IRS site. Here are some things gig economy workers should know about their tax responsibilities. And again, this is the IRS has the position that gig workers are the cheaters, and they need to be reined in. Many people take up gig work on part-time or full-time basis, often through a digital platform like an app or website. Gig work, such as driving a car for booked rides, selling goods online, renting out property, or providing other on-demand work, is taxable and must be reported as income on the worker's tax return. Again, that's always been the case, whether you get a 1099K or a 1099 NEC or whatever. If no 1099Cs, I talk a lot about those. Here are some things gig workers should know to stay on top of their tax responsibilities. Gig work is taxable. Again, I think most people know this. Earning from gig economy work is taxable, regardless of whether individual receives information returns. That's what I was just talking about. Information returns are 1099s. The reporting requirement for issuance of a 1099K for payments received in 2022 is to totals exceeding $600. Used to be $20,000. And over, was it 20 transactions or 200 transactions? It was a lot of transactions. And now it doesn't matter how many transactions if it's over $600, regardless of the total number of transactions. And that's what they're saying. This means some gig workers will now receive an information return, the 1099K. This is true even if the work is full-time or part-time. Gig workers may be required to make quarterly estimated payments. So let's talk a little bit about that, because I don't think people realize this. When you're not a W-2 employee, our taxes are based on what they call pay as you go. Right? So you have to pay your taxes as you go. That's why they take it right out of your pay stub. Right? So you don't wait till the end of the year to pay the IRS. They take it out of each and every pay stub. Whenever it's payroll, they get their rent. If I'm a gig employee, there is no check for them to take. No employer's taking I'm not a W-2 employee, so they're not taking my money. I'm independent. And so those taxes come due as you get paid. And according to the rules, and again, I don't think a lot of people understand this. According to the rules, you are to pay estimated taxes every quarter on the money that you make. And if you don't, there's penalties, and you pay penalties. I think a lot of times that people hire a tax preparer and they prepare their taxes if they're if they're an independent contractor like this, and then they just file their tax returns. They add the penalties. They say, "Hey, there's what my taxes are," and then they just pay it. People don't even realize that they're paying a penalty. For recent developments, okay, so this is the IRS site for estimated taxes. Taxes must be paid as you earn or receive income during the year, either through withholding or estimated tax payments. If the amount of income tax withheld from your salary or pension is not enough, or if you receive income such as interest, dividends, alimony, self-employment income, capital gains, prize and awards, you may have to make estimated tax payments. If you are in business for yourself, you generally need to make estimated tax payments. Estimated tax is used to pay not only income tax, but other taxes such as self-employment tax and alternative minimum taxes. If you don't pay enough tax through withholding and estimated tax payments, you may be charged a penalty. You also may be charged a penalty if you estimated tax payments are late. even if you are due a refund when you file your tax return. Even if they owe you money at the end of the year, they still can penalize you if you pay it late. I just want to go through this. I don't want to go through all of this because it gets too complicated. But there is a safe haven. And the safe haven is if you pay, let's see if we can find it, penalty for underpayment of estimated taxes, extended coronavirus, extended penalty. If you pay 90%, here it is. There's what they call a safe harbor. If you didn't pay enough taxes throughout the year, either through withholding or by making estimated tax payments, you may have to pay penalty for underpayment of estimated tax. Generally, most taxpayers will avoid this penalty if they owe less than $1,000 in tax after subtracting their withholdings and credits, or if they paid at least 90% of the tax for the current year, or 100% of the tax shown on their return for the prior year. So if you're making enough money, if you're making more money this year than you did last year, you're going to owe more taxes. As long as you paid 100% of the taxes that you were due last year, you're good. There's a safe harbor. You're not going to get penalized. If you're making less money than you made last year, as long as you've paid in 90% of what you owe, you're good. You're not going to get penalized. So that's important to know. Because a lot of people have a very good year, and then their estimated payments are too high for the next year. And they're like, well, I'm not making that kind of money anymore. How's that going to work? Again, as long as I can estimate and I pay up to 90% of what my tax bill will be, I'll be good. I won't get penalized. I just thought that I wanted to go there and talk about that. So if they are self-employed, gig workers must pay all their Social Security and Medicare taxes on their income from the gig activity. That's called the self-employment tax. So you have income tax, and then you have self-employment tax. Proper worker classification. While providing gig economy services, it is important that the taxpayer is correctly classified. That means that business or the platform must determine whether the individual providing the services is an employee or independent contractor. A lot of employers will tell you you're an independent contractor when in fact you should be an employee, right? And we can go to this worker classification, but that gets complicated also. Generally, if you're in control of your own, you can make your own hours. They're not controlling how you work or what you do, or then you're an independent contractor. If they can control when you work, how you work, who you're working with, then you might be a employee rather than an independent contractor. This means that must determine, so taxpayers can use the worker classification page on the IRS.gov to see if they should be classified. I don't know if I went there. No, here's a page, the Gig Economy Tax Center. So, and that's all here. And there's a link underneath here in the description about this. And all of these are here. There's a video here about this. The IRS is really taking this action against gig workers because they believe that they're cheating. Paying the right amount of taxes throughout the year. An employer typically withholds income taxes from their employees' pay to help cover income taxes their employees owe. Gig economy workers who aren't considered employees have two ways to cover their income taxes. Submit a new W-4 to their employer. So what happens is if you have an employer and you're working a W-2 job during the day and then you do some work at night for like driving Uber or something like that, if your income, you start making more money, the money that your W-2 employer takes out isn't going to be enough to pay your taxes. So you could change that withholding from your day job and take more out. And that way you're paying and you don't have to worry about estimated tax payments because you're making estimated tax payments through your other employer. And you're going to pay all your taxes. Remember, if you're paying up to 90% of your taxes due, you're good. There's not going to be any penalties. So, but the other way is to make quarterly estimated tax payments to help pay their income taxes throughout the year, including self-employment tax. I think a lot of people forget that, hey, there's another 15%. So if I'm in a 20% tax bracket, really 35% of my pay is going to go towards a self-employment tax unless I have a company. I form a company and then I'm an employee of the company. And this is a structural thing. And this is what we help people do in my company. We help people structure their business to limit their tax bill. Nothing wrong with that. They're totally legal. And you should take advantage of that, right? Planning, tax structure. How can you structure yourself that you pay the least amount of taxes? That makes sense. That's why we have such a very thick tax bill, code, right? If you ever see the tax bill, it's several books of that thick, right? And so there's lots of rules in there. Some of those rules will apply to you. And if you use some of those rules that apply to you, perhaps you can reduce your tax bill. Makes sense, doesn't it? Now, how are you going to know what you should do? Well, you shouldn't. You're not in Texas. That's what we do. We help people with taxes. That's what we help people do. Okay, so the Gig Economy Tax Center on IRS.gov answers questions and help gig economy tax payers understand their tax liabilities. And the IRS believes if you know what your tax liabilities are, you'll pay it. Right, and you'll follow the rules. Most Americans follow the rules. So this is just the Gig Economy page, Tax Center. There's a link in the system in the description about this. What to do, gig workers, find forms, digital platforms and businesses. What is a gig work? If you're a gig worker, you know what that is, right? What are digital platforms? If you're working for a digital platform, you know what that is. And the IRS, and actually, you know better than the IRS because they're still learning this stuff. Anyway, I should have gone back to but anyway, that's what it is. And let me kind of just go back in here and show you the gig. This is the Gig Economy Tax Center page. It's in the description below. Here's the tax. Here are some things. So that's what it is. I wanted to go through it with you because this is one of the most common questions that I get. And again, with this change of the rules that these gig economy is going to get to 1099Ks, and you're going to have to figure out how to pay it. And you're not used to it because you never had this before. And most people don't understand. I take a couple. I do a couple Uber rides, and it's for extra money. You don't understand that 35% of that perhaps should go to the government. And a lot of people say, well, if they tax me so much, it's not really worth me doing it. Well, that might be true. And maybe it's not worth doing it. If you're babysitting for your neighbors, you're supposed to report that money too. Most people won't, right? I'm watching my neighbor's dog. He's giving me $25. Is that taxable income? The answer is yes. That's taxable income. From whatever source derived, right? That's taxable income. But most people don't look at it that way. I sell lemonade in the front of my house. Is that taxable income? Yes. That's taxable income. Yes. So again, most people don't look at it that way, but the government looks at it that way. And so you should probably start looking at it that way too. You want to follow the rules. Most people want to follow the rules. We have very high compliance rate in America. People want to follow the rules. So thanks so much for joining us. Tomorrow we have the Trust Radio Network show. Next week on the Trust Radio Network, next Friday, we're gonna stream. I'm gonna have a panel of attorneys, and we're gonna discuss the recent Supreme Court cases. Not so much the cases individual, but the direction of the Supreme Court. This has really been a monumental shift, historic shift in the way the Supreme Court is looking at the Constitution. And so we're gonna get it. Not all of us agree. We're going to get a panel of attorneys together and discuss it. And I hope you can join us for that. That's next Friday. So thanks so much for joining us here today, though. And you know what I'm going to ask you, as I ask every week. Let me see if I can get this on here. At this point in the show, I always ask you, like and subscribe. We need to get this information out. Do you know a gig employee? This would be very good information for them, wouldn't it? Well, let's get them. If you like and subscribe, we can push this content to them. So thanks so much for your help, and we appreciate it. We're almost up to 3,000 subscribers. We're coming up to that. Very small, I granted, but much better than we were doing. So thank you. and we're getting more subscribers because you're helping us by liking and subscribing. So thank you so much. Remember, this show is sponsored by the Law Office of Stephen A. Leahy, PC, and Open Tax Advocates. Open Tax Advocates helps business professionals solve IRS problems. If you owe the IRS money, if you haven't filed your tax return for some time, you know that. You know if you're having this, and it's eating at you, it's gnawing at you. I know it is. I talk to so many people that have this problem, and really what happens is they get paralyzed. They don't know what to do. Well, here's what you should do. The first thing you should do is get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com. freeirsbook.com. Get your free copy of Deal with Your IRS Problem Today. If you want a hard copy, I'm going to ask you to pay for shipping and handling, a small fee for shipping and handling. We send some special reports and some other things with it. And so there's a lot of bonuses in there. And actually the fee that we charge barely pays for the postage. Thanks so much for joining us here today. We'll look forward to you for our next show. And thanks again for joining us.